All right, good morning, guys. Welcome in. How is everybody doing? Happy Monday. Welcome in. I hope you guys had a nice weekend. I hope you guys are all well rested and you are ready to dive into the week ahead. Welcome in. Good morning, good morning. Some things in the pre-market that maybe will move us, right? Some things this week that finally may get the market out of range, or at least begin to get us out of range. We'll talk about it and what it means. We have some things happening later this week, Thursday, Friday, particularly Wednesday, Thursday, Friday in particular, right? Some things happening here on the earnings reports. Econ calendar, it gets pretty heavy this week, right? We have some big things this week. CPI, Consumer Price Index tomorrow. There are reasons for the market to move, and we are excited for it because so far, January, you look at the start of the year, it has been lackluster to say the least, right? Ups and downs and ups and downs and ups and downs. We are going to talk about what it means today. But of course, we are still in the same range. The market has started off the year in a pretty tight range. So we will discuss this today. We're going to go over our top watches for today's session. Anyway, welcome in. Minimalist me, thank you. That's much appreciated. Thank you for supporting. That is very kind of you. Thank you for doing that. That is much appreciated. Okay, so let's dive into it. Right, we'll go over our SPY chart. We'll go over the 7,000 ES rejections from last week. This was the big spot the market pushed into. The market saw some upside on that Friday session. I actually took short. I took one trade on Friday, one trade. I shorted right here on the ES chart, on the SPY chart, and got some downside. And then that was it. It just broke right out, right? Market broke out. We turned it into support later on in the day and saw a little bit of upside. But again, not much upside. Very constrained upside on Friday after breaking out the key level. Obviously, right now, where are we? We are back under everything, right? We're back under everything. We're seeing a gap down in the market, and we're back down to demand lows here. So nothing's really changed, right? The market's still in the same range to start the Monday session. Let's see what happens this week. But we have to remain optimistic that the Tuesday session, maybe Wednesday session, breaks us out of this range. We'll go over the QQQ chart, guys. Q's chart, of course, also gapping down. It broke above our supply here, 625.50 on Friday session. We saw some movement above, but then fell back below here pre-market session, right back into the same range, the same zone from last week. What does the market do now? Well, let's see what happens and how we respond to our levels going into our Monday session. Okay, so without further ado, we'll go over our Nvidia chart. We'll go over what's happening here in Nvidia, gap down Nvidia, some weakness on Nvidia, some weakness on banks. Morgan Stanley, right? JP Morgan, 10% cap. A 10% cap on credit cards, right? The APR being capped at 10% starting January. So you're going to see that shift. You are seeing some banks being impacted more so than others, right? Morgan Stanley is not a big credit card consumer-facing bank, right? So of course they don't have as much exposure to this. But look at BAC, like look at Bank of America, right? Bank of America, they do have exposure to this. So you're going to see some XLF sell, right? And XLF is selling this morning, but it's not all of XOL of XLF, right? It is mostly centered around the banks that have credit cards, right? I mean, this is just a basic thing. BlackRock, BOK, right? BOK not impacted by this, has no impact, doesn't impact BOK at all. So we'll go over that and what it means for each of these banks. If we have time today, we'll talk a little bit about that going into our Monday session. Okay, so what I want to do is I want to go switch away from this. I want to go over our econ data earnings reports, and we'll dive back into our charts, and we'll have a beautiful pre-market session. So econ calendar for the week. Today is Monday. Monday, we start off the week with Bostic and Barkin. Bostic and Barkin. Fed speakers this week. Fed speakers on Monday. Fed speakers on Tuesday. Fed speakers on Wednesday. Fed speakers on Thursday. Fed speakers on Friday. It's Fed festivities this week, right? What does that mean? It just means lots of Fed speakers, lots of talking heads all week. So be aware of that going into our week ahead of us. Now, the big thing is tomorrow. I love that this is happening on a Tuesday, because if this was happening on a Wednesday session or a Thursday session or God forbid a Friday session, that means that we would have chop all. My head is blocking everything. Yep, my head is literally blocking the entirety of everything I'm talking about. Okay, there we go. So there you go. So The fact that we had the CPI data, the consumer price data on Tuesday, makes it nice for us this week. Why? Because it makes it such that we don't have to wait for Thursday to get the real move. My expectations are, and I'll just give you my thought today. My thought today is choppy Monday for a beautiful Tuesday. Choppy Monday for a beautiful Tuesday. Why beautiful Tuesday? Because of our CPI data tomorrow morning, 8:30 a.m. Eastern Standard Time. Don't be a muppet and swing the whole entirety of your portfolio into Nvidia Friday expiration calls because you think CPI is going to come out great, right? Don't do that. I mean, obviously, maybe it works. Don't get mad at me. But again, CPI data tomorrow morning. That's the biggest thing for the week. You probably want to wait for that data to come out before you take big trades. So let's see what happens after CPI. But again, I think it's a good approach to the market this morning is, hey, wait Monday, take trade Tuesday, right? Obviously take trades today as well, but I think the real move happens on Tuesday session post CPI data, okay? And obviously that's the inflation data. We have Wednesday session PPI, Thursday session more data, Friday session more data. Doesn't matter, we'll talk about it on those sessions, okay? Now, on the earnings docket, this is exciting because finally, I think this is what the market's been waiting for. The market has been, if you really think about it, since about Christmas time, it's been very chopped up, right? For about 3 weeks straight, we've been choppy, we've been consolidated, we haven't seen aggressive moves. Tech has been lagging, right? Nothing's been going crazy, right? Even the strongest name in the market, you look for the strongest name in the market, as we usually do pre-market. We look for the strongest name pre-market for long, usually the weakest name for pre-market for shorts. Recently, there hasn't been a lot of outliers in the market. I think that during our earnings season, we are going to see outliers be created, right? Earnings seasons is the catalyst creation, right? It's the catalyst creation that creates outliers. We need outliers. Outliers are what drags the market, right? A strong Goldman Sachs, BlackRock, Morgan Stanley can drag the market higher. Now, what does this mean for us today? Well, so for Wednesday session, we have WFC, we have Citigroup, BAC. Thursday session, you have TSM, which is the start of the tech season, Morgan Stanley, BlackRock, Goldman, right? So for today's session, it means nothing, right? We don't have much for today. But starting tomorrow and Wednesday and Thursday, the earnings season picks up for our bank names. And going into next week, we start off the tech earnings season. And we always start off the tech earnings season with one particular ticker. One ticker is what kicks off the tech earnings season almost every single time. And it is Netflix, NFLX. So Netflix, I believe, also reports next week. I could be very wrong here. If I'm wrong, then I'm a muppet. But I believe I'm right about this. I believe they do report next week, and you can see, yes, they do. Okay, so they do report next week. These guys report on the 20th of January. So Netflix kicks off their earnings season, and we are excited for that because that's going to give us outliers, and it's going to make it nicer to trade. In my opinion, it's going to get SPY the hell out of this shit zone, right? Because the reality is SPY has been in a shit zone. It's been in a shit zone, and that's what it's been doing for many days in a row. Okay, so let's dive into it now. We've done our econ data, we've done our earnings reports. Let's go into our charts. We'll have a beautiful time here. So, what is going on here on the SPY chart? What is going on here? So basically, up and down, right? Up and down. I mean, this is what's happening here. What's happening from this January 6th session all the way to the 7th of January, so about, I would say, 2 days or 3 days worth of price action here. The move from here, right, to here, and then gap down is basically, if you just take this whole thing and transform it over, right? I mean, it's just deja vu, right? It's just deja vu price action. Yes, deja vu price action. We just have done the same thing again, right? Some upside coming in the market, big upside, and now back down lower, right? So really nothing has happened here. It's just we're back at the same zone. And you look at this gap down in the market, you want to buy puts, but you can't really buy puts here because you'd be buying puts right above the breakout level from Tuesday, right above the highs from Monday, the highs from that Tuesday session, the highs from the Monday session, the highs from Tuesday session, and the breakup point from Wednesday, right? You know that this is an area you don't want to be buying shorts into, right? So you see a gap down this morning, and your immediate assumption is maybe we've gotten out of the range. But the answer is we haven't, right? We haven't gotten out of the range. The market's still holding a very key technical support below. And so what we've done here is you've gapped down into the middle, almost the middle, right? Between a big supply closer towards the top, a big supply and a big demand. And so today's session is going to be guided by whether or not we are above 691 or below 691. That's just what it is today, right? My view is if we can break above 691 today, we see a gap fill play where the market moves higher back into 693. This is what I would expect today, right? A big upside move above 691 gives us the gap fill play in a 693.50. That's the first play today's session. The second play is if we just retest reject here at 691 and we see a downside play into lows here at 688. But of course, you don't want to be short in a 688.5 because again, that's the hold spot from this level, the hold spot from this day, and it's an area where the market can possibly maintain itself as support, right? So the levels are pretty clear this morning, but it's Monday. And what do we say on Monday session? What do we say on Monday session, particularly right before a CPI consumer price index data? We know that this session is going to be a session you want to be probably a spectator, a data collector. It's all you are. You are not a trader. You are just a person who collects data today. Now, if we see the data if we get enough data by 9:37, then take that trade. Don't be pansy, right? Take the trade. But of course, I think that we need to see what happens today. And for me, what happens today is guided by 691. If we see us begin to retest reject here at 691, we start popping into this level pre-market, and at 935 where we begin failing here, then this is a short. I would look for downside, right? But again, if we break up higher today and see clear 691 on the first 10-minute candle of the session, then my expectations are upside today for the gap fill play into highs. I would not short today above 691. Above 691, we likely fill the gap into the close price of our Friday session. Let's look back for a second and see what happened on Friday. On Friday's session, we said everything was about 691. Remember, we said that. We said, guys, 691 is your bull bear pivot. You saw choppiness. Finally, upside, back into supply, downside, back into demand here. 691 held, upside move, and we shorted right here. This is the only trade I had taken on Friday's session, was a short right over here. And look at that trade. A little bit of downside, broke above it, upside, right? So the market gave you some downside move here, but it was really an upside day. Now going into our Monday session, you look at this gap down in the market, we can't assume this gap down means downside today. It doesn't mean that, right? Especially because if you look at the market recently on these gap downs, the gap downs tend to get bought up, right? So let's not go crazy, horned up to the downside here at 9:30 in the morning. Let's see what happens at 691 to tell us what to do, okay? On the ES chart, it's the same thing, but just multiplied by 10, right? You have your big ES 7,000 supply. This is where we shorted on Friday's session. On Friday's session, we got the nice short off the highs here. We built up a short trade right over here. We saw some downside into this low right over there. But again, it got bought right back up. Market held it as support, and we saw upside, a little bit of upside, causing us to close pretty strong on Friday's session. Now, going into our Monday morning, where are we? We closed right over here. We closed right here on the ES chart at 7,002 here in ES. This morning, we are opening down about 48 points. We're down about 48 points here on the, 42 points here on the ES chart. So about 42 points from this low is where we are this morning, or a little bit less than that, right? I don't know. My math is all over the place. We are down, right? We're down here on the ES chart, obviously gapping down. But the level that has us constrained to the downside is 69.76. So 976, I'm just gonna say 976 on the ES chart is our technical level of supply, right? Why is this level so important? You can see it very clearly here in the ES chart. It's the highs from that Thursday session. It's the lows from that Wednesday session before the breakdown, right? Before that breakdown. And it's the highs of that Tuesday session before the breakout, right? This is the level. It's very clear today, right? If you want to see sustained upside today, you want to see a build on the market, you need to see us break, retest, and continue higher back into 7,000 ES, which would be your gap fill play. This is your gap. This is your GAP play today. If the market does build above this high, then again, we will gap today. That's where I'm thinking the market goes to. But if we retest fail here at 976, right, at the 976s, this is not a long. In fact, we just see a little bit of a bear flag play here pre-market back into a key level and a downside play back into lows. So everything we do today is based upon how we respond to one particular level. The level is simply 976 on the ES chart. Where are we going to? 90 or 950, right? 6950, which is our pre-market lows and our Thursday lows. If we break beneath 6950, if we see us break beneath the pre-market lows, which again, do we expect a big day prior to CPI data? I don't know if we do, but if we do see a downside break under these lows, we go into 69.35, which is our next ES demand. Again, that's the Thursday's lows and the lows from that Tuesday session and the highs of Friday, right? It's a very clear level here. But again, if you look at the market here and you want to be really smart with it for a second, this is the shit zone, right? This is the shit zone here on the ES chart. And until we eventually break out of the shit zone, the market is constrained, the market is lackluster, and the continuation moves are far in view. Okay, QQQ chart. On the Q's chart, your demand below is at 620, and we know this demand. We are aware of this demand. We've been talking about this demand for a long time, and we know one thing: we know not to short back into 620. The market 620 support, 619.50, 620 support is critical, right? Every time we've tapped it, we've seen upside almost every single time. And this morning pre-market, it's nothing different, right? We've seen some downside here, a big gap down pre-market, a big exaggerated gap down pre-market, but this is not a gap down you want to short into. Why? Because it's 620 support. Where is your supply though? Your supply here, in my opinion, is at 623. If you are a Fib Boy trader, Fib Boy traders are doing this today. They're going from the highs to the lows. A Fib Boy trader would actually be shorting two spots today. This is interesting. So the Fib Boys are looking for shorts at 625. Fib Boys are shorting at 625. And Fib Boys are also watching the 38.2 today at 623. So it's interesting, right? I mean, look, I'm not saying we should go short immediately at market open today, but I am saying if you see us pop into these levels, what about SPY? On the SPY chart, if you're a Fib Boy trader, what are you doing? On the SPY chart, you're doing from the highs of that Friday session to where we are pre-market. It's almost the same thing. It's still 691. 691 is still a big technical supply, so that's the zone they're probably focusing on today. But here in Qs, it's really both, right? It's 625.50 as resistance, and it's also 623 as resistance. So you have two levels to watch out for today. Again, this is where things become interesting because, I mean, for me, yes, I see 623 as resistance, and I know that if we are underneath the supply zone, this is the clear supply, the supply for today's session, right? For today's session, if we can break above this supply, then I don't want to short this. This is a long for me back into the next supply, which is 625.50. So if you are trading this, just understand you don't want to be long in a 623. If 623 breaks, then you could look for longs back in at 625.50, right? And then again, you don't want to be long at 625.50 because, of course, that's your next level of support. But if you are playing the gap fill, this is the gap fill today. The gap fill is between 623 all the way up to technically beyond 625.50. It's all the way into the 626s, right? It's all the way into these highs over here, these lows over here. That's your gap fill play, right? So your gap technically fills all over here. So I'll write that down, gap fill, right? So let's see what happens today. Obviously, look, it's a Monday session. We have to be open to all these ideas, but this is what we have. We have a gap down in the market into support with key levels above us on two different legs, right? What do? We watch and see how the market responds to the most recent level, 623 on the Qs and 691 on the SPY. That's the biggest thing for today's session. If you want to summarize in one sentence, that for me is what it is. Okay, so let's move on. Let's go over our other names. Let's go over the IWM. On the IWM, this is a long, right? IWM is clearly a long right now. This is more so a long than any other name. Why? Because it's so strong. The Russell is strong. I mean, we spoke about this 258 here being a pullback long spot. It broke it. I mean, look, actually, if you think about this, we spoke about the IWM big upside on Thursday session. We said don't long it on Friday. So you can see here, it technically did turn into a long on Friday. You can see this. It actually probably was your best trade on the Friday session. You can see here, we spoke about this 259 level. I was not I was not going to trade this, to be honest with you, right? But again, this did work out, right? And this is where your bias may actually impact good trades here. But this is actually was a nice trade here. You saw us flush down below here, your level, reclaim, big upside move here on IWM. Now this morning, where are we? We're still above the hold spot from Friday. My view on the IWM is that we are bullish as long as we hold this demand here, right? As long as we hold above Friday's lows, this is a bullish chart. A gap down here pre-market does not mean anything. A gap down pre-market in a support is more so a long than it is anything else. So let's watch and see what happens here on the IWM. But as of right now, your big support down below, 258. If we are above 258, we're bullish. If we break below 258, we're going at 257, which is your next level of support, okay? All right, so let's move on, guys. Let's go over other names. Let's start off with the first ticker of today's session, probably the most clear name, the Apple. So Apple is consolidating, right? It's consolidating against the overall market. The market's gapping down. Apple's not gapping down. Can Apple break 260? If Apple can break 260, upside happens. That's just what it is, right? This is the chart now. You know what it is. You know that there is demand below, where your demand down below is 256. Your supply above us is 260. In order for this chart to do anything, it has to break by 260, right? That's what it is. This happens, upside comes in. That's all it is. If we break below 256, then downside, and you see the market flush. That's what it is, right? So you know that today's session is based upon two things. It's based upon the 260s, and then it's based upon the 256s. If we can break above 260, upside, where does it go to? Well, it goes into these highs, right? It goes into these lows and these highs over here around 260, 250. So for me, that's a top watch today. Is can we get above 260? If we break below 256, I stop out of my longs on Apple because that's my stop loss, and it likely sells, right? And it sells where? It sells to the next level of demand on the 4-hour chart, right? So go to the 4-hour chart, and you'll see the next level of demand here on Apple is back at 253, right? So that's what this chart goes to. Under 256, it goes to 253. At this point, though, we are still holding a very big level here. So my intention is, my goal here is, can it reclaim 260? If it can reclaim 260, then this chart rips. So that's our top watch today, right? Okay, moving on. Let's go over Nvidia. So Nvidia pretty weak this morning, right? And some names are strong, some names are weak this morning. Most names are weak because the market's gapping down. But Nvidia is at support here. You saw some rejections come in here yesterday at 186 on Friday session. Yesterday meaning Friday. And you can see we are underneath this big leg of resistance, which gives us the move down to 181.2 or 180.180, right? 181.80 is your big level, and that's where we're headed to. And you can see we've pretty much done it already, right? We spoke about this before. We said, hey, if we break beneath 186, we're going into these lows over here at 180.180, and we've done it, right? We so far have gotten very close to it, and at this point, it's anyone's game, right? Your level now on Nvidia is no longer 186. It's now going to be 184, right? 184 is a level I'm watching now, because 184 is the lows of our Friday session, right? This 184 level, and I really say 184, but of course it's 181.80, right? But for me, I'm rounding to that whole number here, and my next level of resistance here is at 181.80 to 184. This is the new level, okay? If we can get back above these set of lows, the Friday's lows and the Thursday's lows, then there is some upside today in Nvidia, right? Nvidia will upside trend back in 186. But right now, we are just gapping down into a little bit of a resistance here at the Friday's lows and the Thursday's lows. If I was focused on Nvidia today, this morning, my main focus is going to be, can I look for the retest rejection here for a short move, right? If I could see this little pre-market move turn into a fade here at 184, this should be my top watch today, right? So Nvidia, watch the 184 rejections. If we can see us reject here today at 184, then you know where we're going. We're going 182. If you see us hold 184, you know we're going higher to 186. So again, it's Monday morning, right? A lot of the plays I'm mentioning are bilateral, or basically you can go for a breakout trade or you can go for a rejection trade, right? But again, let's see what happens and how the market responds to 184. 184, the Friday's lows and the Thursday's lows. Right now, we are simply just bearish here, pre-market. There's no reason to be long Nvidia. If Nvidia can reclaim 184, then we can have a long bias, make a look for the upside move back into these highs. Again, our bias is drawn from levels, and right now our bias is simply bearish because we're underneath the big level of resistance. Okay, moving on, guys. We have to go fast because we have a lot of tickers to go over and only a short amount of time. The AMD. AMD is like, what the hell is going on here? AMD is just so weak. AMD has had no buyers. The same thing I said in Nvidia is valid on AMD, except you take it and you use the 203 level instead, right? 203 is your level here in AMD. It's been just stair-stepping. Everything that every move here in AMD has been stair-step lower. It's actually kind of sad to see this, right? You see stair-step lower, stair-step lower, stair-step lower. What are we doing now? My assumption is as long as we're under 203, stair-step lower. Let's not reinvent the wheel here, right? The market showing you still stair-step lower. As long as we're under 203, you know it's going lower, right? 203 is your level of resistance. It is the Friday's lows and the Thursday's lows. If you want to look for a trade today here in AMD, look for the retest rejection and a short side trade, okay? That's what it is today here in AMD. If we break 203, then you could look for the shifter, right? A little shifter, and the down and the market breakout, right? This would be your shifting trend here. This is a Tory Trades type trend line. Hold on a second. What the hell is going on here? Let's fix this. So if you see us clear 203, I mean, to be honest with you, right? Screw the trend line. It's really just 203, right? You can see obviously there's a little bit of trend here, but it's really the 203 level that matters. Okay, it's not the trend line. It's really 203. The reason why it matters is because we are technically structuring lower here, and a structure lower is only true if we are beneath the Friday's lows, right? So if you want to see us see upside today on AMD or this week in general, right, your only upside trade is above 203. If this breaks, the market breaks out and chips go higher. And the same thing for Nvidia, the same thing for SMH. The SMH, even though it actually is a little bit stronger than your other semis. The reason why SMH is so strong is because of other names, right? Particularly your AVGO, your AVGO starting to base out here. Your MU super strong. This is the reason why it's actually so strong is mostly because of MU. But going back to AVGO, SMH. SMH is actually maintaining itself pretty well. You can see we have a very big demand zone here at 371 as technical support this week. Okay, that's your big level of demand. Okay, I would even argue not just 371. I would argue it's 371 all the way to 375. It's that highs from that Wednesday, the 10th session, and that actually is where we held on that Thursday session of last week. So very interesting hold here. If you make the proper adjustment here, you can see your real level should be here. It's not 371. This is wrong, right? Make the adjustments. The adjustment needs to be made here, right? 375 is your level here on the SMH chart. If you're above this level, you're holding bullish on semis, but AMD and Nvidia still a long way to go before this can break out. Okay, so that is AMD. That's Nvidia. Let's move on. Let's go over other names, guys. Teslita. So Tesla, 450 is your big level today. 450 was a level we could not get above on Friday session, right? We saw some upside on Friday. This was probably the only upside name on Friday that actually maybe had given you an entry, right? You can see this chart at 437, 438. It gave you a breakout trade. It sustained in a breakout and basically sustained trend all session. Today's session here on Tesla, you want to stay with trend here. In my view, you stay with trend. We are bullish as long as we are above 438. This is the level here. 438 is your bullish move. If we are above 438, we are bullish, okay? What do we do today here on the Tesla chart? Well, the biggest thing is look for the 450 break today. If this happens, this would be a beautiful trade and the market will rip, and including Tesla. This would be a very nice trend-based trade here on Tesla above 450. If we can pull back today to 438 and you see us develop a hold here, this is your other long side trade. 438 is your support today. If we're holding 438, I'm mostly focused on long side trades because it's the breakout level from Friday's session. If you fail 438, then of course we're flipping back bearish and a downside trade is most likely. Okay, but again, Tesla today to me still looks bullish. Even on this gap down, it still looks mostly bullish to me. As long as we have these highs and these highs holding, it is still a mostly bullish chart here on Tesla. So 438, big support here. Let's not change it, right? It's still a breakout level from Friday. We're retesting it here on Monday morning, okay? That's the Tesla chart, guys. Let's go over other names. What are we missing today? We're missing Amazon. Amazon also very strong this week. Let's not forget Amazon. If the market does pull back and Amazon pulls back too, I am still eyeing some of these demand bounces for longs, particularly this one right here, 239, right? 239 is still a very big spot for me here on Amazon. If we can pull back there, I'm looking for longs. 239 is a serious pullback long spot. Yes, there is some downside to get there, but this is a very strong chart and is one of the only names that's technically forming higher lows every single time, right? Higher lows, higher lows, higher lows, higher lows. Even this gap down the market, it's still maintaining higher lows. So 243 support and 239 support here on the Amazon chart. So keep an eye on Amazon 239, 243 as pullback long spots here on the chart. Okay. What are we missing today? It's 9:05. We have one more ticker to go over. Let's do something different. Let's go over. Where's the energy, guys? Where's the energy? Nobody's talking. It's just me talking. It's 9:05. Everyone should be woken up by this point. We're 30 minutes into the pre-market. You guys should all be there. Where is everybody? All right, we'll do two. We'll do Meta, and we'll do PLTR. So Meta is, I mean, I'm always, to be honest with you, you want to make fun of me about something, I'm always just talking smack about Meta. I mean, what is Meta doing? What the hell is this? What even is this, right? I mean, this is just the shit zone, right? 450 or 655 resistance and 640 support. Something happening here pre-market. Okay, some news here. Okay, all right. Okay, what's going on? News on anything? Just Meta. Okay, I like that. Look at that. See, we just caused that to happen. So Meta news, something going on here in this chart. 655 is your obvious level though. Okay, if you can see 65 break, that's your most obvious level. Is there news today? There is news on Meta. There's got to be something going on here. Not seeing it on my end, but 655, big resistance. If we can break above it, big upside move. Okay, Palantir. Palantir is still underneath resistance 188. My view is 188 is your resistance level. That's what it is. Okay, so if you got the downside play from 188 to 177, that was good. We spoke about this. We spoke about that rejection here at 188 on that Thursday session. Remember we said, hey, this little pre-market move, right? This was like this little after-hour move was on no volume. Big downside came in Thursday. Then on Friday session, it was dead. Well, here on Monday, we're still holding support here. You don't want to see us hold support because if you hold support, we're going back into resistance, 187. Guys, I'm going to end it here. That is all I have for you guys pre-market. It's been a beautiful pre-market session. It's Monday morning. Let's be smart about the week. It's a new year. I mean, obviously, we're 1 week into the new year. Let's trade smart. Let's be smart about the trades we're taking. And let's understand today's session, it's Monday, right? Let's be data collectors. Tuesday, CPI. Maybe today is a little bit choppy, right? We've seen a lot of these choppy conditions so far this year. Let's not pretend today is going to be anything different, okay? Let's be smart, and I'll see you guys all for live trading. Bye, guys.